Hi guys, I thought of providing you with a video tutorial of important revision questions. So let me start with question number one, which is on subsidiary ledgers and special journals. Right now, we learn four special journals this semester. So first, we learn sales journal, which records all credit sales of inventory, and purchases journal, which records all credit purchases of inventory, cash receipts journal, which records all cash inflows, and cash payments journal, which records all cash outflows. So here you're given sales and cash receipts journal question. So first, let's complete the main control account. Now keep in mind there are two sets of subsidiary ledgers, accounts receivable subsidiary ledgers and accounts payable subsidiary ledgers. Right, now in this question we deal with accounts receivable subsidiary ledgers. So you're given four customers: Ellen, Joe, Hannah, and Sam. Now keep in mind there's another customer called Roy. Now Roy does not have opening balance. Okay, so let's complete the accounts receivable control account. Now guys, what is the opening balance of the accounts receivable control account? Now this is the opening balance. So it's 20, 25, 45, 90, and 120. 20, 45, 90, and 120. So if we scroll down to part C, that's the opening balance, as you can see, $120,000. Okay. Right, so they also made credit sales. Now, how much credit sales they made? You're given the total here, which is 170. Now, what happens when a credit sale is made? You debit accounts receivable credit sales revenue. So what you do is you go to the control account. You write 170,000 on the debit side of accounts receivable. And you also write the opposite account name, which is sales. Next, how much cash they collected during the period? They collected a total of $84,000 from customers. That's how you get $84,000 here. Yeah, so you debit cash at bank, credit accounts receivable, and the opposite account name is a cash at bank. Okay, they also received $3,000 worth of supplies from Joe, who's a customer, on 6th of July. So that is a sales return. Now, how do you record that? So you debit sales returns, credit accounts receivable. That's how you get this number. Okay, so let's calculate the closing balance of accounts receivable. 120 and 170. This is the highest amount, which is 290. You write 290 as a total, and the difference is balance carried down, 203,000. Okay, so when we update our subsidiary ledger accounts, the sum of subsidiary ledger balances should also equal to 203,000. So let's start with our subsidiary ledger accounts. Let's start with Ellen. Okay, now Ellen has an opening balance of 20. They made credit sales to Ellen of 25. They haven't collected cash from Ellen. So Ellen opening balance is 20. Credit sales to Ellen 25. That gives a closing balance of 45,000. Joe. Okay, what's Joe's opening balance? It's 25. They made credit sales to Joe of 30. It's 45. They collected cash from Joe 22. They also returned goods from Joe worth $3,000. That's a sales return. Because Joe's opening balance, you should write opening balance here, opening balance, it's 25,000. Now keep in mind, when you write the opening balance, do not write here. That is not a transaction. You write it under the balance column. They made $30,000 of credit sales to Joe. So Joe's accounts receivable balance went up. And it's from the sales journal. You write SJ on the 6th of June. And they received $3,000 worth of goods from Joe. That's a sales return, which is from the general journal. Okay, so the opening balance is 25. As a result of credit sales, it went up to 55,000. Sales return 3,000, and that brings the balance down to 52. They also collected $22,000 of cash from Joe. You have CRJ, that gives a balance of 30,000. Okay, Hannah's opening balance is 45. They made credit sales to Anna 40. They collected $35,000 of cash from Hannah. Opening balance is 45. Sales journal 40. That increased the balance to 85. Cash receipts of 35. That brings the balance down to 50. Next we have Sam. Sam's opening balance is 30. They made credit sales of 35 and cash collection of 15. 30 credit sales from the sales journal of 35, balance becomes 65, and they collected $15,000 of cash, balance becomes 50. Okay, next Roy. Now guys, keep in mind, Roy does not have an opening balance. They made $40,000 of credit sales to Roy, and they collected $12,000 from Roy, cash from Roy. There is no opening balance. Sales journal, they made credit sales of 40,000, which means the balance became 40. They collected 12,000 from Joy, balance became 28. All right, Ellen. Now what's the closing balance of Ellen? It's 45. So you write it here, 45. This is schedule of accounts receivable. Joe, 30,000. You write it here, 30,000. That's a closing balance. And Hannah, which is 50,000. You write 50,000. Sam's closing balance is again 50,000. You write 50,000. And Roy's closing balance is 28. You write 28. As you can see, the sum of accounts receivable subsidiary ledger balances gives you 203,000, which equals to the accounts receivable control account closing balance. All right guys, so let me jump on to question 4 part B. Question 4 part B. Okay, here you're given a set of transactions. You're asked to identify the special journal. There are 4 special journals: sales, purchases, cash receipts, cash payments. And there are 2 subsidiary ledgers. It's the accounts receivable, accounts payable. Now it says the owner contributed $900,000 cash to set up the business. Now that's a cash inflow which is recorded in the cash receipts journal. Now there is no accounts payable or accounts receivable, so there is no subsidiary ledger. Second, owner withdrews $600,000 cash. Again, when the owner takes cash out of the business, is recorded in the cash payments journal. There is no subsidiary ledger affected. Paid $810,000 for rent expense. It's again recorded in the cash payments journal because it's a cash outflow. There is no subsidiary ledger affected. Purchase inventory on credit. Again, you can ignore the GST, don't need to worry about the GST. When inventory is purchased on credit, it's recorded in the purchaser's journal. Yeah, since they bought inventory on credit, they have accounts payable, so accounts payable subsidiary ledger is relevant to this transaction. Paid suppliers $400,000 on amount owing. Again, they paid $400,000, which represents a cash payment, and it's recorded in the cash payments journal. Since they paid on amounts owing, the subsidiary ledger is accounts payable. Sale of inventory on account for $1.1 million, including GST. So guys, all credit sales of inventory are recorded in the sales journal. All credit sales of inventory are recorded in the sales journal. Since this is a credit sale, accounts receivable is affected. Next, last but not least, received $450,000 interest. They received cash. Okay, so all cash inflows are recorded in the cash receipts journal, and there is no subsidiary ledger here. All right, guys, so let me go through other questions in the next video. See you soon. Bye.